Trade fears continue to rattle investors, more and more companies speaking out. The Chamber of Commerce, which is the big business lobby group, saying this morning that tariffs will hurt American companies and consumers' wallets. To give us an inside look at how trade will be impacted, we're joined now by Ryan Petersen. He's the founder and CEO of Flexport, which is a global freight company offering real-time tracking of shipments. Ryan, welcome. Nice to see you.
Hey, thanks for having me on.
So are you seeing any impact so far from the tariffs that have been announced from the United States and other countries?
Yeah, well, so they haven't gone into effect yet, but we're certainly seeing a lot of impact in terms of companies starting to plan for this and starting to think about how do we actually run a supply chain in a world that's with so much uncertainty.
So give us a behind-the-scenes look for those of us that aren't as familiar with what you do in terms of managing supply chains by air or by ship. How does it work,
right, so
and what exactly is going to be risked?
Flexport manages the international logistics for about 3,000 American companies and their 10,000 suppliers overseas, many of whom are in China. So we're right in the middle of the storm here. The Trump tariff should go into effect on Friday as the first round, with $34 billion worth of goods affected, and that's a 25% duty on those goods. So if you were in that group, if your products were caught up in the tariff codes that are being taxed on Friday, it's a 25% hit on your cost of purchasing all your goods. Huge disruption, and it's not like you can move your factory overnight.
So Ryan, does that mean that you're seeing some companies trying to rush finished goods into the U.S. before the deadline? Does it work that way, and others perhaps canceling goods that were on the borderline as far as profitability that now don't make sense to plan to send over here?
That's exactly what you see, and you've seen that with companies shipping products by air freight that might have gone normally by ocean, just trying to get it in before the duty hits.
Which state is going to get hit the hardest?
Well, California is the biggest state in the United States of imports, so you should expect, and of course this is where even the stuff going inland comes in through our ports here in California. So I would expect the biggest impact in California. Texas is our largest exporting state, and you'll see a lot of the products, the agricultural products that are caught up in China's retaliation are produced throughout, of course, the agricultural heartland of this country in the Midwest and in the South.
So what do you expect in terms of business? Are people going to be diverting shipments? Is it just going to be higher costs? I mean, what's going to be the real impact here?
I think there's a few responses, none of which are really attractive for a company. The first would be to move your production to another country. We've seen a little bit of that, for example, with Harley-Davidson moving to Europe in response to European retaliation on auto or motorcycle imports in that case. I would expect to see a little bit of that over the long term if these things really stick. You should see a lot of companies thinking about Vietnam, Bangladesh, other lower cost manufacturing centers, which have already been very attractive given the inflation in China. I would expect over time companies to look at how they can re-engineer their products to fall outside of the tariff codes. And then I think a lot of companies will just have to grin and bear it and hope that 25% isn't the difference between a profitable business and a money-losing one.
Do you have any basis for comparison of this period we're in during the course of your career, or is this sort of new territory?
I think it's new territory for my career, but if you go back in time, of course, there are many examples of tariffs impacting the economy. Most obvious, of course, would be the Smoot-Hawley Tariff Act, which contributed in large part to the Great Depression. So I don't want to go there and think that we're heading in that direction, but trade war is bad for everybody. These companies are engaging in trade because it's mutually beneficial by definition. They wouldn't be trading if it wasn't good for them. And so it's really impacting American companies as well as their Chinese trading parties.
Final question, Ryan. We've heard a lot of companies last quarter mention rising freight costs as a headwind, inflation, especially when it comes to trucking. Is that going to continue?
Yes, I think that the trucking imbalance, there's just not enough drivers coming on. The average age of an American truck driver is something like 63 and getting older almost every year by another year. So we just don't have enough suppliers of truck drivers. Air freight markets are extremely tight. E-commerce just takes up so much more space in an airplane. On the ocean freight, I think there's plenty of capacity. So each of these freight markets is a little bit different, but I do think you're going to see very tight trucking and air freight markets for the foreseeable future.
Got it. Ryan, thank you.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.